and ships. So ultimately, I think this is a cyclical low for these names as well as a secular low. I see the cyclical and the secular both shifting positively here.
So it's interesting, Paul, and you're the go-to person in the space for a long time now, and I respect that. So I'll push back and say, I understand how important oil was to economies globally 10 years ago. I understand what it is now, but with new administrations potentially around the world, all the talk about ESG investing, the push towards greener energy, is oil a decade? Or BK pulled out his Palantir or Seeing Rocks a decade from now. Is oil going to be as important a commodity in a decade from now? Will we talk about it the same way you're talking about it now?
It's going to depend on electric cars. I think that you can obviously see the share price performance of Tesla and the market buying into the idea of electric cars. But in the medium term, the next 5 years, what we're doing is we're resuburbanizing in the US, and that's going to be driven by gasoline. And as I mentioned, really for jet fuel and ships, there is no electric option. So it's all about transport. Additionally, if you look in China and India, you still have a huge amount of consumption of oil, for example, through propane and other fuels that will just keep growing. So, the market obviously is buying the fact that we're going to shift the energy system here. And I've been saying for 15 years that the 21st century will be driven by electricity. But the reality is you've gone too far and you're underestimating or overestimating the ability of the global economy to shift towards alternate fuels. And you can see that really visibly in California. And by the way, that's entirely an electricity problem, which again is a problem for utilities. So although the theme is being bought so hard, the reality is going to be that these companies will be paying out big dividends and I think even buybacks over the course of the next 5 years. And that will be very attractive to shareholders.
Last quick question, Paul. As you said, that people will cycle out of growth and go into names like Exxon Mobil. This almost sounds like a sort of prediction, maybe a pairs trade of shorting some sort of growth stock, maybe like an Apple, which is just diametrically opposed to Exxon at this moment in the markets, and going long Exxon.
Yeah, I'd add one more thing. Look, we're going to get inflation. And if you get inflation, growth stocks are going to be a problem. And the way you're going to manifest inflation, in my view, is by rapidly rising oil prices. So there's not going to be inflation until we tighten the oil market. When we do, oil's going to go back to the moon. And you mentioned how quickly Exxon deteriorated. Don't forget that at the end of last year, we were at $60 a barrel, and it seems, a lifetime ago. As for shorting Apple and buying Exxon here, I'll do it. I'll come back in 5 years and we'll see how they do. Back at the beginning of the 2000s, when I first came to the US, I used to bet salesmen, you name any stock and I'll bet you against my stock. And they would come up with some terrible small cap name. I would come up with Exxon. I never lost that bet. I haven't made it for 10 years. I'm making it today. I'll go for it.
All right. You're booked, Paul. 2025,
Thanks.
We'll have you back on. Maybe sooner. Paul Sankey of Sankey Research. Great to see you.
It's great to see you. Thanks.
BK, you with Paul on this pairs trade?
Yeah, Paul's my type of guy. Yeah, absolutely. I think his point is well founded. Is that I think the biggest thing in the oil market that investors have to watch is there has been a lack or a reduction in exploration and spending on that. So at some point that oil market tightens up. And look at what oil did today. It's a bit hurricane driven, but you're looking at WTI above $43.50. You're looking at Brent above 46. It looks like it's starting to break out. So once these things get going and you get any type of disruption in the supply of this oil, you could have a much higher oil price, which I think would ultimately filter back into Exxon and Chevron.
All right.